Joining us is the MD and CEO of Infosys, SD Shibulal, live from Bangalore. Mr. Shibulal, thank you so much for taking time out and joining us right here on ET Now. Before we get down to the specifics of the deal, I want to get a sense from you on what role did pressure from the market and investors play in closing this particular transaction. If this particular deal was on the table, say, a year back, would you still looked at it at these valuations? Or was this, in a sense, also inspired, so to say, by the kind of pressure that there's been on the company from investors and market participants?
So if you look at the last 18 months, we have clearly articulated our strategy for the future, the Infosys 3.0 strategy. During that strategy, we have clearly stated that our objective is to build a balanced portfolio. We clearly believe that the only way to create a sustainable organization for the long term is to create a balanced portfolio. That is the way to provide higher value to our clients. That is the way to address some of the industry concerns like scalability and commoditization. This acquisition, which we announced today, the Lodestone acquisition, is very much in line with our strategic choices which we have already made. And those choices we made is 12 to 18 months back. This is in the consulting and system integration space. That is a space which we have built over the last 10 years. We get 30% of our revenue from consulting and system integration, one of the highest in the Indian industry environment. This strengthens our consulting and system integration capabilities in continental Europe. Another very important area of investment for us. We have clearly stated that for Infosys, continental Europe is emerging markets. Because while there is turmoil in the market, for us the revenue from continental market is only 10% of our revenue, which means that we have opportunity to grow. So this is very much in line with our strategic choices. It is very much in line with our focus on consulting and system integration. It is very much in line with our focus in Europe. It also creates a powerhouse in SAP with 10,000 consultants delivering $1 billion of revenue.
Mr. Shibulal, hi, afternoon, and congratulations on the Lodestone buy. Firstly, you mentioned that the deal is going to be EPS accretive only in about 18 months. Could you give us some color on the profitability of Lodestone? Is it profit-making? What were the margins like in the last financial year?
It is profit-making and it is growing. In fact, last year I think it grew 20+%. Now the deal will close in October, and once it is closed, we will actually add Lodestone's revenue and profits to our projections for the year.
Also talk us about the margins, because there is a bit of a concern on that front. What are the potential levers that you have at play with which you could potentially look at improving the margins once the company is integrated?
So the most important thing in consulting, even if you look at our 30% of consulting and system integration which we do, the management consulting part, it's like the tip of the iceberg, right? That is the piece which you use to enter into the boardroom, create these opportunities and convert them into the downstream revenue. So the most important thing is to create synergies between the upstream revenue, which is the management consulting revenue, and the downstream revenue. Today, if you look at Lodestone, all you are seeing is the upstream revenue, right? It is the tip of the iceberg. And usually the management consulting firms operate in a single-digit margin profile. But the important synergy is when you actually use that upstream revenue to create your downstream revenue and combine these two revenues together. In that case, we clearly believe that this will be of high revenue productivity, high quality revenue, which means that it will be of high revenue productivity as well as above our average margins.
You also mentioned that there is almost no overlap as far as 200 clients of Lodestone are concerned. So clearly there is cross-selling opportunity over here. How big a potential could this be?
So that will be good potential. In fact, if you if you listen to the press conference, many of the clients which was mentioned by Ronnie, where many of them are not our clients. So we believe that the overlap is low. So this is a perfect combination because it allows us to strengthen our management consulting capability in Europe, which we can use for our own clients. We have a number of clients in continental Europe where we can use their capabilities to actually create transformational opportunities and leverage those. Simultaneously, the Lodestone clients can get the benefit of the global scale and the global capabilities which Infosys has. So it does create opportunities for cross-sell on both sides.
Consulting now, Mr. Shibulal, becomes a $1 billion powerhouse for the company. Does this transaction also give you an advantage as far as potential deal bids are concerned going forward? Do you think you can now probably pursue a whole host of other large deals as well? And how many such deals are you pursuing currently?
So, it does allow us to actually have deep capabilities in continental Europe. What does that mean? It means that we can actually go after larger transformation deals. There are many deals which Lodestone went after where they were not able to, they were getting feedback from the client saying that while you have the right set of capabilities, you do not have the global scale. So we can go after those deals. This allows us to go after very large transformation programs, some of the most complex transformation programs in continental Europe.
Mr. Shibulal, you've also maintained that the acquisition is also going to help enhance your footprint in Europe. Now, this is not the best of times to be increasing exposure to that zone where there is still so much uncertainty. What is your sense? Is demand really improving in Europe as well as the US?
So I agree with you that Europe is going through uncertain times, but it is important to note that our revenue from continental Europe, see, Europe has in my mind two parts, UK and continental Europe. Our revenue from continental Europe is only 10% of our total revenue. So from a footprint perspective, 10% of the revenue is only $700 million. That is not a large revenue from continental Europe. So I clearly see opportunity for growth in the continental Europe. If you look at it from the Lodestone's perspective, 50% of the revenue comes from Switzerland, about 23 or 24% comes from Germany. These are both stable markets. So, while continental Europe is undergoing some challenging times, for us, I clearly believe that continental Europe provides us with opportunities for growth.
And what about the US?
So, US, of course we have said that in the beginning of the quarter we have said that US is undergoing challenging times due to unemployment, economic uncertainty. There is lack of confidence, delays in decision making, as well as scrutiny of large opportunities, large deals in US. At the same time, if you look at the quarter, we had announced we do not announce all deals, but we had announced one large opportunity which we closed, Harley Davidson. So, there is really no material change to be mentioned at this point in time compared with what we saw in the beginning of the quarter.
Mr. Shibulal, just to analyze some of what you said over the last few minutes, there seems to be a more than significant revenue upside as a result of the Lodestar transaction. If that were to be the case, why is it that you're not revising the guidance for this year, or is it because you expect the revenues to trickle in over the next 12 to 18 months?
So the deal will close in October, right? It will close in October. At that point in time, we will include these into our ongoing forecasts.
Right. Before we wrap it up, Mr. Shibulal, the deal takes part of, utilizes just a very small part of your cash reserves. What's the strategy from here on? Would you be keeping the cash intact to pursue more acquisitions as well? Because that's something that the market would want to know more about. Or would you be open to considering some dividend payouts as well?
So, as we have always said, cash is strategic to us. In this industry, cash is very, very important. And it is strategic in nature. We will use it for strategic purposes. At any point in time when we find that we are not able to use it for strategic purposes, we will give it back to the investors. We have done it in the past. We have actually given one-time dividends in the past. At this point in time, we believe that the cash is extremely strategic to our, and especially in a situation where we are embarking on a new journey of Infosys 3.0, which in that situation I clearly believe that cash is strategic.
Mr. Shibulal, my last question to you before I let you go, and it's kind of revisiting the first question that I asked. For long now, the market has been harsh on Infosys, saying that the company is not aggressive, it's been a bit of a laggard. Do you think with this particular transaction you've answered the skeptics?
First of all, as I said, the answer to the first question, this transaction is strategic. We have always said that acquisitions are strategic for Infosys. It is meant to create step jumps in our strategic journey towards Infosys 3.0. We have clearly stated that the objective of 3.0 is to create a balanced portfolio. I clearly believe that that's the only way for us to create value for our clients and create sustainable organization which can deliver our aspirations of superior performance. So this acquisition is strategic. It is in the areas which is strategic to us: consulting and system integration, continental Europe, life sciences, in multiple dimensions. And the reason behind this acquisition is to continue our journey of Infosys 3.0.